Good afternoon, morning, or evening, everybody. Welcome to our Open Office Hours series. Today's topic will be Advanced Financials. I want to thank you again for joining us and for your continued interest in our series. And we'll get started. The topics that we're going to cover today are going to be expense amortization, expense allocations, statistical accounts, and budgeting using the Advanced Financials module of NetSuite. So let's get started. As always, we're going to log in into our NetSuite account. Please, if you have any questions along the way, please make sure to use the Q&A window. We will also answer the questions that were previously submitted as part of the Zoom registration process. So we're all familiar with this account. I am going to show you a couple of ways that you can know if you have the module or not. Advanced Financials is an optional module of NetSuite. It used to be called Advanced Financials. Now it's called Financial Management Cloud Service as part of NetSuite's rebranding a couple of years ago. A lot of the Suite Success editions that are now available come with that module bundled, but older companies that may have had NetSuite for a while may not have it, or you may have it and not know you have it. So if you're an administrator, the way you know the fastest way to know if you have it is to go to Setup Company and View Billing Information. And this is where you can see everything you have enabled in your account by NetSuite. Under Add-on Modules, you'll see different modules with old names. You'll see here Advanced Financials, and if you have it enabled, if you're paying for it or have it as part of your suite, you'll have yes next to it, and if you don't, it'll be empty. So just look for that and to see if you have the actual functionality. Then once you do that, also as an administrator, you may have to enable some features that you have purchased but have not enabled, and thus don't have them available in your account right now to start using. And when you enable the features, which I will show you in a second what those features are, you'll start seeing different things in your menu, different options in your menu for that specific functionality. So for the ones that we're gonna cover today, if you go under Enable Features, Accounting, you'll see all their advanced features. You'll see several features that are there. One of them is expense allocation, dynamic allocation. It's now grayed out because once you have an allocation schedule that's dynamic, you cannot disable that. You'll see amortization. You'll see multiple budgets. And under company, I believe it's under company, you'll see statistical accounts. Will be the other option that you'll have available. So you can look for that. Those are options that you need to turn on. Once you have those turned on, now I'm going to switch to a controller role. Actually, I'm going to stay here just to keep it easier. If you have a controller role, I'll switch quickly. Just note that those options are going to be in different places. And the controller role, most of the options that I'm going to talk about are going to be under financial lists or financial other transactions. So you may have to look for them, but you can always type in allocations, for example, and it's going to show you the options. So let me switch back to my administrator role, and let's get started first with amortization. So amortization is basically the option that NetSuite gives you to enter a prepaid transaction and amortize it over time and have NetSuite do the work of creating those journal entries for you over time. And the way you can create amortization, the first thing you have to do is create amortization schedules or templates. So under lists, accounting, if you're an administrator, you'll see this amortization templates option. I have a couple created already, prepaid insurance, prepaid rent, software expense recognition. I'm going to look at the prepaid insurance and look at that template. And it's pretty simple. It basically, you give the template a name, you define, it can be either a standard, one of the standard methods, or a variable method. If it's variable, you have to define your variability here in the recurrence section. But we'll concentrate on standard today. And then you have multiple options. You have a straight line by even periods. You can prorate first and last period. You can use exact days, and you can create a custom, where if you do a custom, you can use the recurrence here to set up your custom. I'm going to concentrate on straight line for now. It defines a source. What's your source of the transaction? And we'll see it in an example in a second. But basically, you can do a transaction date, and if you are using receiving, advanced receiving, and you're using the accrued expenses option, where you actually accrue the expense on the item receipt and not on the invoice, then you will use the receipt date. And then you have options for that are sometimes optional, but what's your deferral account? So what account this applies to? In this case, I have an account called prepaid insurance. And what's the contra account? This is used mostly for depreciation schedules if you're using this instead of fixed assets. And you have a target account, which is what account that amortization schedule is going to expense every month. You can define the number of periods, and which is this year would be 12, and this got it got reset when I changed this. You can define a period offset. So if you want this to wait a month from the transaction or the receipt date, you can define here it will start a month later, and you can also start an offset. You can define an offset for that. And if there's any residual that you want to leave to be expensed all the way at the end, then that will be done in the last period. Or if there's an initial amount that you want to capture initially, and it will then amortize the difference based on this rule. And if you don't want to use it anymore, you can always inactivate it here. So you can see here in view mode, this is set up for 12 periods for, with an offset of 1 month. How do you use this in a transaction? There's a couple of transactions. You can use it in journal entries, and you can use it in, I'm going to concentrate on vendor bills, but this can be created from the actual purchase order, and it will carry over to the receipt and to the vendor bill. So in this case, I'm just going to do a purchase order. Sorry, I'm going to do a vendor bill. I'm going to enter a vendor bill for John Jones. It's going to be my vendor. I'm going to select the location. It's mandatory here. And some of you may be familiar with this, so I'll show you both examples in one transaction. Let me make sure that I have the right form here. Sorry, this is the purchase order. I'm going to go to the vendor bill. So again, I'm going to choose my vendor. And some of you may use items for your transactions. Some may use expenses directly. So I'm going to show you both examples. So I have an item called prepaid insurance. And I'm going to say that it's $1,400. I'm going to say it's $2,400 for prepaid insurance. And I'm going to apply the amortization schedule. You see here that it automatically applied that as the schedule of prepaid insurance, and I'll show you this in a second. And I'm going to say to start amortizing this on 6/30. So this is going to override that period offset, and I don't have to put a period in because it's 12 months based on the schedule. And the other option that you have is that you can just select the account. So I'm going to go to my prepaid insurance account, and in this case, I'm going to say it's $1,200, and I'm going to assign the same schedule. and I'm going to, in this case, just say that to start on 7:30, not 6:30. You'll see the difference. Before I save this, I'm gonna go back to my prepaid insurance item and show you, you're using items, how you can set this up to automatically load the amortization schedule in your item. This is a service item it has to be for purchase or for resale. And you have your accounting where you can define your expense account. You can also define your deferred expense account for that item. So you can, this is defined at the item level. And depending on how your forms look, you'll have a field, I have it here on the revenue recognition / amortization, where you'll define what's the default amortization template for that item. So if you're using items, that automatically gets defaulted. You can always change it, but it will automatically get defaulted. And you can also define the period if you want to change the period from what the actual template has. So if I put here 24 months, then it'll, because I know I'm buying insurance for the next 2 years, even though my template says 12, it'll override it by 24 months here. So I'm going to save this, and I'm going to say that's approved already. And it's very important for you to note that if you're doing an amortization, all the periods that are going to be affected into the future by this schedule need to be open in the system. So in this case, I'm starting at 6:30 for 12 months, so it's going to do it all the way through May of 2021. So in my setup accounting manage accounting period, I need to have that accounting period open for the schedule to be able to create that, for the system to create that schedule into the future. If you don't have it open, it will not allow you to do it. Note that you it doesn't mean that everybody will be able to post into the future. There's an accounting preference that I'll talk to right now under accounting preferences, where you can define the number of, you can define an accounting window, and then periods open. So you can say, I want to have one future period open only for users to select future periods. So when you create a period, or your accounting year in NetSuite creates all the 12 months, but you can define how many are open for future posting transactions. So just know that that part is important. So if we go back to the bill, we'll see that if we look at the accounting, the GL impact of that bill, I'm going to have the accounting impact for both the 2400 and the 1200 here, and my accounts payable here as I would expect. So that all to prepaid insurance. And within each specific bill, which is specific line, sorry, you'll have this link to the amortization schedule. So if I open that for this specific, this first line, you'll see that it has a number, where it was created from, what template, all the general information, and then it tells you, what that schedule looks like. So this can be reported on if you want to run a report, amortization schedules, and see all your, you would have to define that report with all these characteristics. You could define what your amortizations into the future look like, what amount per month, and you'll see how when this gets amortized, it already recognizes that. So I'm going to go back to my bill, and the same for this expense here. It has another schedule. It updated the end date here as expected based on the 12 months in both cases, and this is ready to be amortized. And the way that you would, one thing that you can do to set up amortization is you can set up a reminder here, amortization entry spending. I'll move it up here. And it tells me that there is an amortization entry pending here. This is a window where you can create them all. I'm going to move over to June. There's probably a lot more here in this demo account that I care for, but I'm going to move over to June 20th. And I'm going to select the subsidiary that I'm using, which is the US. and you'll see that it selected based on that vendor bill the amortization schedule for the $1,200 for the $100 that I sorry, this is, let me make sure that I use the right bill, so it doesn't, this doesn't look right. Yeah. So this is where it's going to show you the, and these amortizations are 630 to 531. So it's going to show here. You can also select, for some reason it's not showing me the one that I'm expecting, which is this one for 200. So I'm going to select July, which is now it's here. And when you select, this is expected July. So you can select the period. You can include prior periods if you want for that subsidiary by clicking on this checkbox here. I'm going to exclude that to not have to comment. And you can filter this by transaction, whether it's something from a bill, from a credit. You can do reverse amortizations. When you do a vendor credit, it will amortize it negatively. A journal entry, you can select if it's a specific customer or vendor. So you can do all these things to filter it out, and you can run them all. If I unclick this, it doesn't give me, it runs all the schedules. If I select the schedule that I want to run, I can click. If I want to do that, I can click here. I'm going to run them all. It's going to select the schedules here, and it's going to create, and I hit create journal entry, and it's going to run a process to create that journal entry. That takes a few seconds. It's processing here, as you can see. And when it finishes, you can click on complete, and it's going to give you the 3 journal entries, or the journal entry that it created for all 3 schedules. In this case, 1 journal entry for all 3 schedules. And if I click on that journal entry, you'll see several lines in the journal entry for each schedule, where it's taking, it's debiting the insurance expense, and it's crediting the prepaid insurance for each one, all tied to John Jones. And if I go back to this bill and I go to this schedule here, where I know schedule 9 was amortized, I can see here that this was amortized in July per the plan, and it was $200 amortized already. And here at the top, and here you can see your remaining deferral balance, or what's amortized, the total amount to be amortized. So that's amortization schedules. Next, let's move on to expense allocations. And I'm going to show you first how you set up allocations. There's 2 types of allocations. So let me see where the allocations are in this account. Allocation schedules are here, inventory under financials, and I have a couple. I'm going to show you ones that I already have created. So I have a rent allocation schedule. I have a couple of schedules here, and then I have a healthcare insurance allocation. So the rent allocation schedule the concept is pretty simple. It takes allocations that you enter at the GL level, and it allocates it based on your parameters. So in this case, I have an allocation to the US subsidiary. It's going to do it at the end of the period. The next time it happens is in May of this year. And then the allocation at the simplest level, you can filter here, but at the simplest level is taking my rent expense that I entered for the company, so without any department, location, or class classification. And I am allocating it in this specific example to rent expense, but I'm allocating it to 2 locations, US 1 and US 2. I'm using percentages, and I'm using a 50% for each. I'll show you later how to use dynamic allocations, but this is sort of at the simplest form what you can do. You can use department, you can use location. I could break this into multiple lines for US location by department or by class. So you can basically use multiple combinations with one source here. Then once you create the the allocation schedule, you're going to have a transaction in the system. So in this case, I already have a transaction for rent. So if I go to my dashboard, I have a couple of allocation schedules due. One of them is rent, and this is based on the fact that I have a bill or journal entry where I allocated $1,000 to rent. So I'm going to split that up. Before I do that, what I also want to show you is that under my allocation schedules, here I have another allocation schedule, which I did it separately, which is for the US, how to allocate the US rent. And the allocation schedule is going to look similar, but you see here that that it's running on, it's going to be used as a source, the rent expense for US 1, and it's going to allocate it to US 1 marketing and US 1 engineering. So I'm gonna, if I go back to my list of allocation schedules that you have here to allocate, I'm going to run this. I'm gonna click view. It tells me to create a journal entry, and it basically runs the process and creates a journal entry. We allocate it out of the top level into my allocation schedule for that, and it puts it as a memo, so you know that this is from. It knows that it's created from allocation. It's you can create a workflow if you want this to be automatically approved. In this case, I don't have that, so I still have to go and approve that journal entry. If I go back now to my transactions here in my allocation schedules that I have, keep doing this. I have my US rent, and I could do the same thing here. It's going to do it in June. In this case, it tells me that there's no transactions in June, so I want to show you that message because I have not entered a rent expense for June. So if there's no rent expense, it doesn't know how to allocate. One of the questions was, can allocation schedules be done by vendor? As of now, that functionality is limited to the expense. But what you can do when you're entering we've done work to automate that, but you can also, when you're entering a bill for a vendor, or if you're doing a vendor bill, which would be the most logical way, you can select, so let's say I'm doing that rent expense directly in my vendor bill. So I'm going to look for rent expense here. So I want to show you a quick tip, because I should have done this before, and it'll help me here. If you don't like scrolling down the list and you just want to use the wildcard when you're doing drop downs, if you come to the dashboard set preferences, there is a preference here under general. It says maximum entries in drop downs. You change that to 0 and click save, and this only applies to you. If I come back to my bill, now the drop down still there, but I can enter part of the name. So I'm going to do that here, but in my expense, if I just want to enter percent rent, it takes me directly to my expenses, and I can choose my rent expense here. So it's a little bit faster. But if you want to allocate to specific departments a rent expense, you can do it here. You can select, the department here, marketing, and say 500. And then I can, if I want to allocate more to another department, I can copy this line. It copies everything, and just change this department to operations and another $500, and then copy this line again and change this to sales and put 200 here. And by doing that, you're basically allocating that rent expense to that department. Additionally, then you could save this transaction as a template, as a memorized transaction. If you enter this every month, And that way you don't have to enter everything every month. You just change the date and you change the amounts if you want to, and it saves you some time. So that's a way that you can allocate transactions based on the by department or within the vendor bill. So that's an easy way to do that. The next thing we're going to cover is dynamic allocations. But before going and showing dynamic allocations, I want to show you the concept of statistical accounts. I mentioned that that's a feature that needs to be turned on. But once you have turned it on, if you come to lists, accounts, and you go to your list of accounts, you'll see on the view, there's a link, there's a drop down for statistical. You can create what's called a statistical account in the system. It doesn't hit your GL, but allows you to capture statistical information. So in this case, I have 2 statistical accounts, one headcount, one employees. Employee in headcount has a balance. If I click view on that, you'll see that it basically, the setup of this is fairly simple. You give it a name, you give it a number, you use a type, a unit type, which is defined in the system during the configuration, and you use a unit of measure. And this is going to be headcount. And again, like with every account, you can define if it's limited to a department, location, and what subsidiaries use it. So it's basically the same setup as a normal GL account. And just like a GL account, it has a register. So if I go to that account register, as of a given date, for my US entity, I don't have any transactions in this month, but if I do it for April through June, you can see that I enter a journal entry on in April, and then one in May for headcount, where I'm going to make this a little bit bigger, where I entered how many different people. So if I look at that journal entry, it looks exactly like a normal journal entry. It's called statistical journal entry, and you should be able to look it up here, statistical journal entries, or it should be under menu under financial, make statistical journal entries here. But basically, you'll see that this is a one-sided journal entry. You define a date, the subsidiary, you need to approve it, and then you enter the account, the department, and you enter a number. And there's a couple of ways of doing it. One is if I do a new journal entry here, if I do a new statistical journal entry, you'll see here that I can enter one for the 31st of May for X. I'm going to say that it's an absolute update. So it doesn't let me for June. So let's do it it does it for June automatically. Absolute, it's not an incremental. It's sort of a reset of that account, of that amount. And then you can select your account here, head count. So I first need to select the unit of measure type. Now this froze, so let me reload this. My browser freezes here. Absolute for the US subsidiary. Unit of measure type people. And it's going to show me the accounts that I have, head count. I'm going to say department is marketing. And I'm going to say that I have 5 people in marketing. And I'm going to copy previous. And I'm going to select operations and say that I have 7 people in operations. And I'm going to do one more line. And I'm going to select administration only. And I'm going to say that I have 4 people in administration. So I'm going, and it's approved already, and I'm going to save this. And So it gives you this message, I want to reverse everything. So it updates the balance. So I say, okay, because I did an absolute one, it's going to reverse everything that I have in the system and bring it back to this amount here that I have. I'm just thinking I'm just doing that. So it's approved for posting. And it created an absolute balance update offset journal entry. So it updated everything that I had in the system for all the other departments down to 0 here to update that. So that's what the absolute would do. So the way, once you have this, you can run a balance of what your journal entry balance of journal entry is, or statistical account is. But the way you use this is that you're going to create an allocation schedule. So if I come to my allocation schedules again, and I do my list of allocation schedules, I have one called healthcare insurance allocation. And this is a dynamic allocation schedule. So if I edit this, it's a dynamic allocation schedule. I'm going to change this to June, since I entered that in June. It uses the headcount account as a weight source. You can define multiple date bases. I'm going to define as of date. So it uses how many people I have on that date. It defaults this unit type and unit measure, and my source is workers' compensation, 6312. So it's going to take anything that I have in workers' compensation, and it's going to allocate it based on the people that I have, the people that I have here. It's going to allocate that by this percent, because I have 4 people in administration, 5 people in marketing, 7 people in operations, and everything else goes to 0 because I have 0 people in that department, and this allocation schedule had been set up with all these other departments in mind when it was first set up. So that's why they're still there. I can have this be reminded be forever, or how many times I want to do it. So I'm going to keep it as reminder forever, and I'm going to click save now that it's saved. And what I'm going to do is now I'm just going to enter a simple journal entry. At the end of June for the US subsidiary, for 6312, and no department, no location, no class. I'm gonna do $1,200, and I'm going to debit, in this case, just to keep it simple, I'm gonna credit my bank account. This journal entry needs to be approved for it to run, so it's approved. Now when I save it, so that's my simple journal entry that I get when I get my bill, or my journal entries if I'm not using a bill. And then if I go back to my dashboard, or I go back to my allocation schedules, and I look at this allocation schedule here, I run a create a journal entry based on that rule that I created, and it creates a journal entry where it allocates 25% here and the other percentages, remember, into those 2 accounts. And I still approve it, and now I allocate it dynamically. So as my employees change, my amounts change, but I can, in the mix, if I'm using that rule, and you can use things like square footage of a building, any number that you can capture and create a journal entry for, you can use it to allocate dynamically, so you don't have to use Excel to run those allocation formulas. A couple of things that I'm not going to get into too much, but I want to point out is that you can do intercompany allocation schedules. So with the same logic, you can, if you have a parent company where you capture an expense for, let's say, your C-level executives, and you want to allocate that and push down to the operating companies, you can do it that way, using the same rules, percentage-wise or dynamic. And so that's one thing. And the other thing is allocation batches. And I'll quickly get into allocation batches using that example that we used before. when we have the rent expense and you have the rent expense for US1, you can create a batch where basically a list where if you have an allocation that depends on another allocation, you can set them up in a sequence where NetSuite will go through that sequence and create the first allocation that moves things to different department classes locations, and the second allocation will be dependent on the first one, and then the third one if you need to, etc. So you can create that list so you don't have to run them manually. You just run it once and it does all that for you. I don't have any here because the reason that I don't have any here is because the allocation schedule itself, when it's set up, it needs to be set up with a frequency of run by batch. So and then in the batch you set up the frequency of that specific allocation schedule. So sort of a two-tier setup for that. So hopefully that's useful. And before we get to the questions, we only have 20 minutes left. I'm going to go talk about budgeting and a high-level view of budgeting. So budgeting, every account has the ability to have a budget, and a budget will look something like this in NetSuite. These budgets can be imported from an Excel template, and if you go here to transactions, financial, set up budgets, you'll see that there's a way to list them, to search, and you can do an import. If I do an import, it gives you just like the CSV import, it has its own window here, and it gives you a template that you can download. The template is pretty basic, so as you add additional custom segments or other things, you may have to add them to the template. But if you're familiar with CSV imports, it'll be very simple to execute, right, and to create. But the budget, basically, every account has the ability to have one budget per year. What Advanced Financials gives you is the ability to execute, to have multiple budgets. And the way that you do it is, or you set up a budget, is that you can set up, obviously you have your year, you have your, and then you have what NetSuite calls a budget category. And budget categories are basically equivalent to budget versions, where you can create a budget, and then you can create forecasts, forecast 1, forecast 2, forecast 3, forecast 4, as many forecasts as you want. And the budgets, when you create a budget or a budget category, you have two options. You can create a global budget. If you have one world, basically it's a budget template that applies to every subsidiary, and then obviously you use a subsidiary as a criteria in your budget template or when you create it, or you can do a local budget that it's not basically shared by other subsidiaries. So in this case, I'm going to just select, I'm going to call it legacy. I'm going to use the legacy category, and it's a global category. And it's much easier to do it in Excel and then upload it. Obviously, especially if you use tools like Excel or other tools to do your budget, and then you just want to import it into NetSuite, you can manipulate it easier. But at the simplest level, you can create a budget. If I do that at the global level, meaning for the entire company, all I have to do is populate these fields. You have here all your accounts, and you can filter this by income and expense, income only, expense only, balance sheet accounts, or all. So I'm going to do income and expense only, and it filters this here. And you'll see all their expenses on the left, all the accounts on the left, and all the months across for that specific fiscal year that you selected. And you can select an account, and you can either populate each cell manually, or you can, if you're doing it using the interface, you can say, well, it's going to be, my revenue is going to be 1.2 million in the year. So if I do this and I click on the apply, and I click distribute, it's going to take that 1.2 million, it's going to distribute it evenly across the 12 months. The other thing I can do is I can say it's going to be $500,000 a month, $50,000 a month, and I can select here, and click fill, and it's just going to push $50,000 for every month. So that's sort of an easy way to do it if you're using the interface. If you're using Excel, then you have 12 columns and you do it that way. So you do this for every month, and you can also break it down. So if I save this now, it's going to be for the entire company. If you're doing budget by, there's no easy way to, well, I can do 0 here. I can do this and do fill, 0. Just to do this here. It doesn't like the 0. So the other thing you can do is, if you want to do it by department, then it's the same concept, but you are going to select the department here when you save it, when you're creating it, and you do the same exercise, and it's going to save it to that department. If you're doing department budgets, at the end, all the budgets for that have this specific, thing in common, these two things, the year and the category, are going to roll up to your budget versus actual reporting. But you have to be careful not to double up on budget, right? That's a control that NetSuite will not necessarily provide, where it says you already have something for marketing, and if you do marketing for a specific project, for example, I have to make sure that I don't have that in my general marketing budget. So just be careful when you're filling out that template. If you have a budget in the system already, and I'm not sure that I have one, so let me just, so if I was doing the budget for 2020, I'm just gonna do this here, and I had that 1.2 million here, and I distributed it, or if you uploaded it via Excel, I'm just gonna save this so you can see it, to see how it works. So I have, this is what it basically gives you. If I come back and I select my, if I select the budget here, if basically I'm selecting the subsidiary, the year, and the legacy budget, if I just filter income and expenses, you'll see that I have my budget here. So if I had uploaded the budget and I just wanted to change one account for a given budget, I don't want to have to upload it again, export, get internal IDs, and upload it again. I can just come here and say it was really 120,000 a month, and I can update it here, fill, and and then save it again, and it will update that budget. So once you have uploaded it, you can update it within the system. Once you have a budget in the system or in NetSuite, then you can do your budget versus actual reporting here. So if I have, I'm gonna save this here. I don't have a lot of accounts with budget there, but if I go to my budget versus actual report, then you would select your period, and you would select the category. So I'm gonna select the legacy budget because that's the one that I'm using. I can do my columns the way that I can with any financial report. Is for the US. If I refresh it, you'll see my my $100,000 should be here. I don't see it, but it should be here. Subsidiary context, US. See, it would show up here. I'm not sure exactly why it's not showing up here, but this is how it would show in your budget. So I'll have to check on that. So let's, we have about 12 minutes. Let's go to the questions. So the first question that we had was, I'm interested in hearing about prepaid amortization. We talked about that, so hopefully that answers your questions. I would like to see how expense allocations work. How do you stop or accelerate an amortization schedule? So if you want to stop it, you need to make it inactive. If you want to accelerate it, then you really would have to go to that schedule and edit the schedule, or cancel it and create a new schedule for the remaining using a journal entry. Would you like to see amortization schedules work? Prepare insurance, we cover that. How do you export a report of the GL balance in an account displayed by amortization schedule detail? So if you want to export a report for the account, so basically you would have to create a save search, and we can see that. I don't have one created now, but you can create a save search of the amortization information that you have pending. There's not a deferred expense roll forward report that you can look into, or we could create a safe search of all the GL accounts that have deferred balance based on that amortization schedule balance. Our journal entries automatically prepare and posted. Not when it's loaded, it is when you run it. So it creates a schedule, but it doesn't post transactions into the future until you run that schedule. For amortization schedules, do you have to have a fixed asset module? No, you can use amortization to track fixed asset account or fixed asset accounts. If you don't have the fixed asset module, it doesn't. Obviously, you have to. If you're constantly adding fixed assets, you may have to play with that schedule, but you don't need to have the fixed asset module to have amortization. The fixed asset module obviously handles more of a subledger, and you can see the amount by asset itself, which is a little bit, that's a lot more detail there. We had a question about implementation issues that are relevant to the subject matter. That's a very open-ended question, but when you're implementing NetSuite and this module, you just have to make sure that you are defining your schedules well. You can always add schedules into the future or in the future. You have to define your items well, and you have to know, you have to have your right accounts so that you can, like anything, sort of design the what you want to do, and then the system you just configure it in the system. Budget versus forecast. It's a question how the system handles budget versus forecast. Are those separate in the system or synonymous? So with NetSuite, they are basically, it's the same concept. You have a budget and you have a budget version. Some people use the budget versions as forecasts, and then you can run your actual against that forecast. We get a lot of questions about budget versus actual versus forecast reporting. NetSuite doesn't have any reports that can show you all three in one report, like your original budget that got frozen versus what forecast versus your actual to date, or does not have any functionality to update forecast based on actuals. There is a module called Planning and Budgeting Cloud Service that NetSuite offers that does all that. Has budget, has forecast, and you can do budgets versus actuals versus forecast reports versus forecast report. Pull in the actuals from the NetSuite ERP into that module. That module is based on Hyperion, so it does exist outside of NetSuite, but it has single sign-on functionalities with NetSuite, so you can click through from NetSuite to that system. But it's based on the old Hyperion product in the system that Oracle created a new version for the cloud, and now it relabeled it NetSuite Planning and Budgeting Cloud Service. A related question: how can NetSuite budgeting be used to budget payroll expenses by employee or both hourly and salary employees? So NetSuite itself can't do that. NetSuite is a top-down budget by account. Isn't a drivers-based budget by other drivers like employees, employee levels. But NetSuite Planning and Budgeting Cloud Service allows you to set up a lot of variables, and based on variables, do what-if analysis, and eventually create budgets that you approve, and then you report your actuals versus that. So it's very powerful. And the other question was about allocation templates to vendors. So we talked about how to allocate to vendors directly in the vendor bill. Once a schedule has been submitted and the period is locked, can you change the GL accounts for future periods? If the period is locked, you won't be able to enter the journal entry, even in the past period or a future period. So the period has to be open. If the period is closed, there's a setting in NetSuite of what period to use for those transactions, and what's going to happen is going to post it to the first open, depending on your configuration, either the first open transaction after that closed period or the current period. And that's a global setting that you can set up when you're configuring the account, and we can help you with that. How to create automatic invoice and reminders. So we talked about reminders and dashboards a couple of sessions ago. There's reminders here that are out of the box that you can set up. You can look if the one that you're looking for is here. If not, you can always, and all these reminders that have the C here are what's called custom reminders that you can set up by creating safe searches. They're all based on safe searches. So if you have any specific questions, we can certainly help you with that. And the last question was, is it possible to tie revenue and cost by sales orders? And there is a gross margin functionality on the sales order that you can use to track your gross margin by sales order and eventually by invoice as well. Not the topic of today's call, and we're really running out of time, but if you have any questions there, please feel free to contact us. So that's the end of today's webinar. Hopefully this was useful. Thank you for answering the polling question that we sent. We're really interested in adding additional topics that are useful to you. These webinars are, even though we're doing a high-level overview at the beginning, the purpose is to answer your questions, so hopefully we're answering your questions. If you have any topics additional to those that we covered in the polling questions, please send me an email directly. You get my invitations every week, and thank you for your patience in that. And we look forward to seeing you in future webinars. We are, as you may know, we offer support packages. So we haven't talked about that, but if you are ever looking for support beyond what NetSuite gives you with Suite Answers, we do offer support packages. We are revamping that. But if you're interested in having a support package with us and you don't have one, please reach out to me as well, and we can explain that to you, how those works, and work something out with you. So thank you again. Have a nice weekend, and we will see you next week.